Per usual, everything on this channel is for educational purposes only, is not intended as financial advice. Quick bit of housekeeping. Lots of people asking, making sure I'm alive. Where are my videos? What's going on? I work for Valkyrie Investments now. I post videos on their YouTube channel once a week. You can check those out. Highly suggest you click the subscribe button, maybe the bell. That's up to you. In case you're wondering where my analysis has been, we're also putting out weekly one-pagers with my analysis. Look for those on twitter.com. So I want to do this video on Sunday. I got distracted, Super Bowl, whatever. All these charts are from Sunday, so not anything's really changed. The analysis is really the same. But if we look at, just real quick, the correlations between legacy, still there. We're coupling, we're uncoupling, we're going to war, we're not going to war. Rates are up, rates are down. We're getting an emergency rate hike, yes or no. I'm just going to pretend. This was what I was going to say on Sunday. I'm going to pretend I'm in a bubble. I'm in a deserted island. I get flares and they give me price once a day of everything. And I don't know anything else is going on. I don't know the news. I don't know Russia. I've never heard of a rate hike. I don't know who J-Pow is, right? Just going to pretend for a moment in a vacuum that I know what's going on because I know how charts behave and how markets move, not because I can understand geopolitical events or macro stuff. So if we zoom way out on BTC, we are most bullish when we are above the 200-day moving average. You have to buy into that, or else you're not going to understand most of the stuff anybody talks about TA-wise. Look at it on backtesting. Pick your favorite thing. If it's chicken bones, if it's shaking a tree and see how many apples fall off, whatever it is, you got to pick something. You got to start somewhere. And if on backtesting it makes sense, then use it for forward testing, okay? So right now it tells us we are below the 200. We're cross bearish on the 50 and the 200 cross. However, we have the potential for what I'm going to be leading into Q2, which is this bullishness, this once a quarter type of entry that we don't get too often. Not necessarily based on EMAs, but EMAs will be on your side if this plays out, because we will see a move above the 200. We will see a 5200 crisscross probably into mid Q2. I don't expect that to happen prior to Q2, but these are all things to look for. Now, much like it was crisscrossy nonsense down here, it very well could play out like that on high time frames here. But nevertheless, it is still on your side if we are above the 200, if we are crossed bullish. On the pitchfork, pick 3 points, get a rate of change. We're still in the range. We're still in the pitchfork. Nothing's changed, right? It's been a year of sideways nonsense. So my job as a trader is to decide, okay, are we trending? Yes or no? Are we making higher highs or higher lows on some high time frame? Arguably, no, we're not trending. We haven't really been trending since October, since April, right? Pick some time point where we made a high. There are lower time frame trends that you can trade. There are lower time frame trends that occur, sure, but in general, we haven't done anything since April, right? In a grand scheme of things, 30 to 60, massive range, enormous range. Most of Bitcoin's history is below 20K, below 15K, right? So to say this is a bunch of nothing is an interesting remark, but it's true. We haven't done anything here price-wise. Obviously, if you're long from the top, you're wrecked. If you're short from the bottom, you're wrecked. But ultimately, we're in this range. So what am I looking for going forward is a return to this mean, this rate of change mean. Currently, that's basically back to the range highs. And ultimately, if we don't make lower lows in the range, then we test the highs, right? That's just how ranges work. Establish the range. You bounce around, bounce, 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 bounce. You keep knocking on doors. Anybody home? No. Anybody home? No. Anybody home? Oh, someone opened the door. Boom, we're above 70, right? That's the type of range-bound nonsense we could potentially be in for quite some time. So you have to consider that in the broad scheme of things. But intra-range, you can certainly trade. So this looks decent for a move just on its face back to range highs, right? We didn't bust lows. We didn't bust through the pitchfork. We held above yearly pivots. Right now, the yearly pivot is also right there as confluence for resistance as well. Going one step further into the cloud, again, we're above, we're bullish, we're below, we're bearish. You have to buy into that. If you don't, you're not going to understand anything I say here. Much like the 200-day moving average, ideally, your entries match how price trades relative to the cloud. So if you're bullish, the most conservative bullish entry, not investment advice, is 51K, because that is when we are above the cloud. Now, this is dynamic support resist as I see it. Not everyone's going to agree with that, but that's how I see it. That's the first thing to think about and to look at. Secondly, we also have these trades that occur, again, about once a quarter, where we attempt to move through the cloud if we are in a trend reversal situation. Now, just as we did 1, 2, 3 times in 2021, we have the potential for this edge-to-edge move from 40 to 51, from 42 to 51, whatever price we were at by the time we get there. Ideally, for me, we do a bunch of nothing until we're there in March. Ideally, we maybe droop down a little bit, just chop around, chop people up, chop up anybody trying to trade this on leverage early, get those people out of here. Whatever the market needs to do to make sure that this thing actually plays out with the bias that I see it currently. So it's consolidating under the pivot, consolidating under the 200-day moving average, and getting ready for this edge-to-edge move in the cloud. Oh, by the way, this is also an inverted head and shoulders chart pattern that is currently building in its process of completion. It is a pluripotent stem cell currently. It is getting ready for the cell differentiation phase here as that chart pattern gets locked in and that setup gets locked in. Prior to that, this could be a whole bunch of stuff. It could be an Adam and Eve. It could be an ascending triangle, right? We saw this in 2018 where it took a long time. We saw rising, falling wedges here, morphed into what I thought would end up being an inverted head and shoulders here, right? It wasn't. I was like, oh, Adam and Eve, right? It wasn't. I was like, oh, this is an ascending triangle. And that finally played out. So the bias was correct the entire time. The TA never told you technically to enter the trade because entries for all this stuff is at the breakout on volume, which we never got. So in my camp, the TA was never wrong. But on top of all of this, you had this setup, this multi-month setup into an edge-to-edge move into the cloud, and that played out. So if I'm thinking about post edge-to-edge, right, let's say this is inverted head and shoulder, let's say this moves to 51, what is my expectation after that? This is massive tea leaf reading, crystal ball stuff here, but I certainly do not expect a Ponzi type situation, which was the plus token stuff where we just keep moving. That's unlikely. Let's just say, we can look at the stats behind that on the cloud. We certainly saw this edge to edge slowly play out from June to September 2019, break down and then continue. So it's possible it happens, but I wouldn't assume mega massive hopium at 51. Certainly 51 to 64, but we'll cross that bridge when we get to it. Ultimately, right now, in the moment, inverted head and shoulders, TK, bull cross, edge-to-edge trade, slam dunk, pivot break, 200, EMA bust up. These are all things that are completely, massively bullish. Oh, by the way, we also canceled or attempting to cancel this M double top. This is an M double top. I don't care if you don't think it is. Sorry, it is. Everyone's looking at it like that. And that's the whole point of TA. What do people see in general in aggregate? Again, if you in a vacuum pull this up, you're not going to think, "Oh, this is super bullish. Look at this M for murder double top." No, that's not how this works. So it's good that we're canceling this. It's good that we canceled or negated or attempting to negate this head and shoulders breakdown, which very much happened on volume as expected on the neckline. We did not reach the expected target, which was around 26, because we found support at 32, 33, 34, where all that volume was previously. So just as this head and shoulders didn't reach its expected target, we also have to pay attention to that for the inverted head and shoulders. This is the alligator fractal. It did cross bullish February 13th or something on the daily. Again, pretty simple. You have to buy into the fact that if we're below, we're bearish. If we're above, we're bullish. We're trending. That's how you determine trend. And these fractals are telling you entries and stop losses. I don't know what it looks like currently, but my guess is this entry is still here and there's a stop loss at 41 or something. So if you're reading this strictly, you're not entering anything until you get a break above the fractal. But much like this September and October consolidation, we were setting up for this inverted head and shoulders that kind of never completely materialized, even though the bias still played out. So it's always a give and take between risk and reward when you're looking at these setups, because you might be thinking, well, I don't want to get in at 46 because that's super late. I'd rather get in at 42. And my argument would be, well, you're not wrong, but you're also taking on a bunch more risk with the assumption that this breaks up. If it doesn't break up, obviously you're at break even or worse. But if you have that bullish bias currently in a vacuum, go for it. And this is what it looks like. Pretty simple, pretty run-of-the-mill head and shoulders. I actually saw an article on Bloomberg this morning talking about head and shoulders. So I'm not crazy. I am crazy, but other people are also crazy in that they see this. But this is how you'd measure it conservatively. If you pick some neckline, pick some low. I usually don't go from wick to wick because that gives you like a 56K target. But if you just want a conservative target, yeah, it makes sense. We break this level, we move up to the next resistance, currently around 52, right? Not rocket science. Hey, 52, 51 is also the cloud level. Weird, right? It's also the 50% retracement from high to low. All this stuff starts to make sense. Now, if this is the pluripotent stage where it could be a bunch of stuff like it was in 2018 into 2019, this could Adam and Eve, this could ascending triangle, right? This could do a lot of stuff, but ultimately, if this breaks out at horizontal on volume, then it's a go for me as a trade. We may even throw back, which is common, where it breaks out on volume and then pulls back to 44, checks to see if there's support, and then goes again, right? That's certainly all within the cards here. But ultimately, what you need to see first is a break above 44 on volume. And here's how it looks with everything together, edge to edge, TK cross, above the 200, above also this key VPVR level at 47. So lots of stuff. There's that yearly pivot as well, right? Lots of resistance areas here, lots of confluence for stuff in this zone that says, hey, definitively, instead of being bearish, we're bullish now. You know, we're still in the range, so we're still in this box, but we are on the bullish side of the box. We didn't quite reach the oversold territory based on the 2-year MA at 31. Also in the cards, right? Let's say I'm wrong about all of this. Below 31, certainly possible, but that's a trade and a risk setup that you have to think about when you take the trade. You know, I mean, does it satisfy being in oversold territory? No, but it looks good enough as far as attempting to test an area. You know, like being down there with an inverted head and shoulders is good enough for me. Would I rather be down there in a multi-month ascending triangle to be sure? Yeah, but you know, we don't always get what we want, or a multi-year white coffee and accumulation with an ascending triangle. Sure, but I certainly think that satisfies enough people for a pullback. What was it, 50% or something, 55%? Something else to watch for in the distant future would be a break above the 20 SMA on the weekly again. Historically, if we're above, we're bullish. We're below, we're bearish. We're currently in a range, so all MA stuff just falls apart because it's not trending, right? Just like it fell apart in 2019, 2020 before breaking out. We weren't trending, so chart patterns take over. Bollinger Bands take over. Horizontal levels take over. If we're flat, it's horizontals. If we're rising, it's MAs. On the weekly as well, we also held above the cloud, which is super, super, super important. If you're looking for trend-based stuff, weekly cloud is where it's at for sure with BTC. So yeah, we're still in this range, but we definitely saved the trend so far. Something else to watch also in the distant future, if I'm wrong about this inverted head and shoulders, or if we break up and then break down out of this range in like months from now, right? What does this look like at the 200 EMA on the weekly and the 200 MA on the weekly? These are two levels that have been support historically. So these are like the must bounce areas around 20 to 25K. And then lastly on ETH real quick, also same thing. Arguably that head and shoulders looks better than BTC's. Arguably volume's descending. Obviously had a ton of volume at the bottom here, but I'd argue, yeah, sure, this is descending. You know, it's not perfect. It's not always going to be perfect. I wish this was a horizontal instead of a diagonal, but it is what it is. The target's still the same. Doesn't really matter. It doesn't care that it's ETH. It doesn't care, right? I'm in a vacuum right now. I can't hear what's going on out there. The resistance areas make sense. So I like 41 to 46, somewhere around there, if this breaks up on ETH. If you want to be hyper aggressive with targets, you know, this potentially measures to all-time high retest, which is insane. But again, all the same stuff applies here. Consolidation under the 200, consolidation around the pivot, consolidation just below the cloud on the daily. It has this edge-to-edge move to 3,500. It's setting itself up for a bullish TK recross. This looks better today. Obviously, this was February 13th. This was 2 days ago at this point. But I think you get the drift of what's going on here. Here's alligator fractal on ETH. Also looks good. Telling you the same stuff, right? You don't need to know all of this stuff or all of what I'm saying to understand what's going on here. You can just pay attention to the 200, right? We get back above the 200, bullish. We get back above the cloud, bullish. Back above this pivot, bullish. back above these set of MAs, bullish, right? If we're making lower lows, I'm bearish. If we're making higher highs or about 2 at resistance, I get bullish. That's just the way it is. Real quick as well, Solana. Solana looks worse than everything. Solana may take more time. The reason I'm so bullish on Q2 in general is because seasonality tells you that alts do extremely well in Q2. Now, Solana's up like 40,000 million% already. Is it going to have another run? I don't know. But I'm just looking at this in a vacuum right now. This could be setting up for an Adam and Eve. It certainly is not a triple bottom, inverted head and shoulders, any of that stuff yet. You know, maybe this even goes deeper and we get this sort of inverted head and shoulders into late Q2. I don't know. But it's nothing I'm ready to jump into at this moment, below the 200, below the cloud, death cross, not for me, right? Tons of volume resistance on the upside. This is all supply rating, waiting to be sold, in my view. People who are maybe stuck up here. But technicals for me on Solana are much deeper into the wait and see camp. Ideally, ETH breaks up, BTC breaks up, takes a profit, rotate it into Solana as this maybe looks better. I don't know. Not exactly a trading setup per se, but something to watch for. And lastly, gold. This may play out in our lifetime. Who the hell knows? But multi-year, multi-decade, no, decade-long cup and handle. We talked about this with BTC in, I don't know, 2016, 2015, something setting up like this. And the chart pattern people will tell you that multi-year setups don't play out often, or whatever it is they want to say. But it's not there. Cloud supports this on the weekly. It's breaking out. I don't know what gold is today, but gold is one of the few things this year to date, that's actually positive. So, hey, we may break out. It may take, 2 years for gold to get here. It may take another 10. I don't know, but gold looks pretty good relative to everything else. So again, reminder, I'm on the Valkyrie YouTube channel weekly. Check that out. Leave me a comment, leave me a like, dislike, whatever. Interact with the videos. Let me know what you want to see. That's all for this one. Like, dislike, comment, share, subscribe. Happy trading.